receiving these financial statements. And so these statements are, for all intents and purposes, the same as any other year that you would have gotten an audit in terms of the level of assurance that we are providing. Having said that, we did perform the audit. We performed it in accordance with generally accepted auditing standards and specifically governmental auditing standards, using those specific governmental accounting and auditing regulations appropriate for the government entity generally and for the City of Columbia specifically. We tested the assets, liabilities, revenues, and expenses of the city, and did so with the complete cooperation of Linda and her staff. We found the books and records to be neat and orderly. Linda, of course, was cooperative and well organized. We also tested the federal monies that you received this year, and I'll spend a little extra time on that in a minute, because as it works out, in this difficult year, you had additional audit requirements because of the receipt of significant federal monies through a federal grant. There were no disagreements over accounting issues, no disputes over access to auditing information and accounting records, no disagreements over financial statement presentation, in no attempts to dissuade us from our opinions. In all ways, the audit went just as you would expect and would want it to go. As a result of our work and Linda's assistance, we were able to bring to you this draft clean opinion of the audited financial statements. You have before you 3 different audited statements that we're going to quickly review. I say quickly because this is an executive level presentation, having already had the opportunity to review this with your accounting staff. We did audit the TIF fund, the Tax Incremental District Fund. You have the financial statement in your packet that's been provided to you. It pretty much speaks for itself. I'm not going to go into much detail at all than to tell you that we have audited it and to point out that you have now paid off the 2007 issued tax incremental financing bonds in this fiscal year. And so congratulations on having done that. And you have a clean opinion on your TIF fund, which can be filed with the state of Illinois and satisfies the city's requirements in that regard. You also have before you a report that you've not seen before, which says single audit and the uniform guidance reports. And that is the specific audit on the federal monies that you received this year. And that was the $1 million that you received in connection with the building that's being constructed up on Sandbank Hill. And so those $1 million in federal monies triggered an additional audit requirement under the federal audit regulations for federal monies. And so if you take that report I just mentioned, the single audit, I'm going to look at page 8 for just a moment, because page 8 is the most important part of this, and from my perspective, and it summarizes the results of our work here. And it says that there were, with regard to internal control over financial reporting as mandated by federal statutes in connection with the receipt of federal monies, there were no material weaknesses identified, no significant deficiencies identified that would be significant but not considered to be material under the federal regulations, and no non-compliance, related to the financial statements and their related notes. In addition, as a result of our work on the federal monies, we are reporting in this report and summarizing now that there were no, with regard to monies under specifically the federal program, that is to say the specific federal program under which you received $1 million, there were no material weaknesses identified relative to the controls required to be in place over the $1 million, and there were no significant deficiencies in internal controls over those monies as well. And so that's a very positive report. And at the risk of saying anything nice about her in front of her, although I'm actually a few miles away, Linda did a nice job in ensuring that that control structure is in place. If you look at page 6, you can see the $1 million that was received. As a matter of regulation, federal monies received in excess of $750,000 in any given year triggers the need for a federal audit under the single audit provisions. And that's why it is that we're talking about that this year. And so the $1 million that you received from the State of Illinois Department of Commerce and Economic Development was actually federal monies that the State of Illinois passed through to you. And in addition to passing through those monies, passed through those audit requirements as well. So you received a clean opinion with no deficiencies noted on the receipt of those federal monies. That then brings us to the annual financial report itself, the document which you would expect to see year in and year out. And you have attached to that document a expected and proposed draft clean opinion, subject only to this board's receipt and approval. If you turn for a moment to page 12, to walk you through the assets, liabilities, and net assets of the city. And I said page 12, I should have said page 11. Apologies. This math thing is really hard, you know, for us accountant types. So on page 11, which is the statement of net position, which is the assets, liabilities, and net assets of the city. You see it starts with cash and cash equivalents and investments together of $13.2 million, split some $7.6 million for governmental activities, and another $5.5 million for the water, sewer, and ambulance funds. So a total in cash and investments for the city of $13.2 million. I will tell you that's an increase of some $700,000 net over the previous year, where that number came in at 12.5, and the 12.5 of last year was an increase of some 1.2 over the 11.3 million that you had in the previous year. I'm focused on those numbers for just a moment because in the end, reams of governmental standards, auditing and accounting pronouncements notwithstanding, one of the real measures of the financial viability and stability of a governmental entity is its cash position and whether that cash position is increasing or decreasing. And so your cash position continues to increase appropriately. You continue to be well and appropriately capitalized as a governmental entity in this environment. The rest of the current assets that you see are the same assets that are there year in and year out. You have a handful of inventories in your governmental activities, salt and other items. You have some accounts receivable. You have taxes that have been levied for real estate and other items. As you can see, $3,056,000 in real estate taxes, for example, a variety of other taxes. There's no material change in those balances from one year to the next. And of course, we audited those balances as well. Total current assets then is $17,942,000, of which $6.2 million is in the water and sewer funds, which we'll touch on in a minute. The governmental activities of $11,007,000 is mostly, as we said, cash and investments, and the rest of it is levied taxes. You then have fixed assets, non-current assets on the financial statement, which consists principally of the equipment that you have in your operations. And those numbers increased quite a bit this year over the previous year. They increased in the general fund and they increased in the water sewer fund as well. In the general fund, I will tell you, you had some 1.3 million in fixed asset additions, spread throughout a variety of small dollars. There were no significant individual items. When I say no significant individual items, I compare that to water and sewer, for example, where we saw additions to the Gent Road water main project of $483,000 and additions to the Wecker pump of some $876,000. So in your water, sewer, and so forth funds, you had almost $1,360,000 in capital additions. You also had some $38,000 in ambulance capital additions. In the general fund, as I said, a variety of capital asset additions. You had some dollars in the Creekside Lake project. You had 3 different vehicles that you purchased, a whole series of miscellaneous capital expenditures. Total assets then of $30,636,000 in the general fund, another $16,004,000 in the water, sewer, and ambulance funds, for total assets of $47 million, notwithstanding the pension funds, which we'll talk about in a moment. On the liability side, not significant liabilities relative to your asset size, and liabilities which are very comparable to what they've been for the last couple of years. And so you can see accounts payable in the governmental activities of $195,000, accounts payable in the business type activities of some $361,000. I can tell you that number is a bit higher than it's been in previous years because there were Wecker pump dollars that were appropriately sitting in payables and simply hadn't been paid as of April 30. All of the accounts payable were paid on a timely basis. We reviewed those payments and it was handled appropriately. You had, as you can see, some accrued payroll as well, very comparable to the previous year. Some bond payments payable. Again, nothing that sticks out as unusual relative to other years for the city. And then you have bonds payable this year of $3,385,000. If you look at page 10, very quickly, you will see the bonds listed, and you can see the $3,385,000 in bonds, plus there's some capital leases that sit in there. So total bonds and leases of $3,980,000 as compared to the previous year, $4,655,000. And those dollars, the difference is simply the payment of those amounts in normal events. I'm now going to take you to the income and expense of the city on page 12, where I tried to take you a moment ago too early. And if we look at page 12, you see total expenses in the upper left-hand corner for government-wide. Now, this is government-wide only. We'll look at water and sewer and ambulance in a moment for revenues and expenses. So for government-wide, you see total expenses of $9,104,000. That's up a bit from the previous year, in part because there is $1 million that flows through as revenue and expense with the DeRosset, I guess that's pronounced DeRosset project that we mentioned earlier for the building. And so when you look at general government of $3,555,000 as an expense, know that that is over $1 million higher than the previous year because the expenditure of the federal monies is sitting in that spot. In the same way, if you look 2 columns to the right, you can see under operating grants and contributions, $1,02,190. Year in and year out, you would expect that dollar amount to be much, much lower. Last year, for example, it was some $12,000. The difference is that $1 million federal monies that we talked about earlier. And so the grant in and out reflects itself in those 2 line items. So the net impact on the bottom line of the city, by the way, is 0. It simply is an in and out and provided the opportunity to create that business event for the city. So total expenses of $9,104,000. Of that, I will tell you that salaries and benefits are roughly $5.5 million. There's another $1 million of depreciation. So you can see that 2/3 of your expenses is captured in salary and benefits and depreciation. Depreciation is simply the wear and tear on the assets you've purchased over the years. So that gets you to, from governmental activities before we have tax receipts, a deficit of $7,336,000, as we've discussed many times. That's appropriate because the city is a tax-supported organization, and so should show a deficit at that level. You then have taxes. You can see the general revenues, property, replacement, sales, income, and so forth, totaling $8,935,000. So that net, you have a change in net position for the city from governmental funds of $1,582,000. That number is actually very comparable to the previous year. Now, I should also mention one other unusual item that I just skipped over and want to go back to. If you go back up under operating grants and contributions, under program revenues, we talked about the $1,002,190, of which $1 million is the federal monies. 2 lines below that, under highways and streets, you see $203,664. That includes some $200,000 that was received as a grant for the Creekside Park project. And so those revenues were one-time grants that showed up in that category. And then there were capital expenditures. So much of that amount was capitalized as an asset on the balance sheet on the statement of net assets of the city. The other item I want to call your attention to as an unusual item this year relative to other years, under general revenues and other sources, where we were a moment ago, that comes to $8,935,000. About halfway up in that category is the Fire Protection District reimbursement amount of some $520,000. And that $520,000 represents the final payment, the complete payoff of the monies that the Fire Protection District had pledged to pay to the city in connection with a fire truck that they had purchased and which the city had issued a bond issue for. And I mention that first off because that $520,000 is a bit of a one-time event for you all. You won't have those revenues next year. The Fire Protection District has in fact met their obligations with regard to the city by the payment of that amount. I also mentioned it because you still have the outstanding bond issue, and so you're making payments against those bonds. And so while you have those monies and they're sitting in your cash balances, you'll be spending them over the next several years as a part of your debt service of the bond issue. So that then brings us to $1,582,000 in connection with the net position increase for the city for this year. And of that $1,582,000 and another $812,000 for the business type, so a total increase of $2,300,000. As we discussed, your cash position is up $700,000. The rest of that increase shows up in capital additions that you purchased during the year. So the net infrastructure of the city has increased by a significant portion of your profit. Now, I'm just going to keep going because I have the benefit of being on Zoom, and so away I go. If we then turn to page 18, we've talked about the proprietary funds, the water, sewer, garbage, and ambulance funds in terms of the assets and liabilities. We talked about the fact that you had capital improvements in the water and sewer fund of $1,360,000 in connection mostly with Wecker and Gent. So this is the revenues and expenses that came in from those funds. On the water and sewer fund and the garbage fund, you see operating revenues for water and sewer of $3,716,000. That's up some roughly 2% over the previous year. Garbage is up by roughly 5%, total revenues of $824,000. You have expenses, as you can see, water and sewer audited expenditures of $2,983,000 and garbage of another $829,000 of audited dollars. Under the ambulance fund, the $745,000 in ambulance fund revenues continues the exponential increase in revenues that the ambulance fund has seen. Last year, the ambulance fund had $624,000 in revenues as compared to this year's $745,000. And just for perspective, if you went back to 2015, you would find that the revenues in that fund were literally at $318,000. So significantly more than double over the last 5 years in the ambulance fund as a result of the city's activities and supporting the health of its residents. The ambulance fund continues to run a deficit. So you had ambulance fund revenues of $745,000, expenditures of $1,222,000. That then gives you a deficit of $477,000 before the intergovernmental agreement. Those monies of another $190,000 leave you with a deficit of $272,000. That's not unlike the deficit that you budget and run almost every year. You transferred over another $216,000 from the various funds so that the net position decrease was some $55,000. So net, the three funds together showed an increase of $812,000, of which, as we just discussed, the ambulance fund showed a decrease of $55,000, and the other two funds showed an increase of $813,000 and $54,000. Actually, the ambulance fund, I will point out, last year you actually showed a slight surplus after transfers, so that the 2 years together are pretty much break even. Now, I've covered an awful lot of numbers. I'm going to touch on just one more for you, and that is if you turn to page 42, then I'll have you look at 45 in a moment, but let's start with page 42. Page 42 is the IMRF fund for the City of Columbia. And in what is a real positive, and by the way, the audit report I've just delivered, the financial review is generally very positive. I will tell you that page 42 is another positive reflection for the City of Columbia, because when you look at page 42, this is, thank you, well, there you go. This is an analysis. I guess you all were tired of looking at me. I don't blame you one bit. This is an analysis of the pension fund position for the city. And you can see roughly 3/4 of the way down the page, the planned fiduciary net position as a percentage of total pension liability. The plan is actually slightly overfunded at 102% of liabilities, which is to say you have assets in excess of the actuarially determined liabilities of the plan for the City of Columbia to the tune of an excess of $332,000, which leaves you roughly 2% overfunded. The actuarial assumptions and, of course, the investment results are the key here. You can see that last year you actually were underfunded by about 7%, so that you were at a 93% funding ratio as opposed to 102%. The year before that, you were at 107% funded as well. And I will tell you that the primary difference in 18 and 17 was changes in the investment results and some changes in the actuarial assumptions that drove the results. And so if you look up here, you can see in 2018 and 2017, in both years, the actuaries changed the assumptions associated with the planned results. And as a consequence, that impacted your bottom line. But the real takeaway here is this plan is 100% funded. And I can tell you that there aren't a whole lot of municipalities within the state of Illinois or others that would find themselves in that position. Now, on a slightly less positive note, if you turn to page 45, no surprise, the police pension fund has not had an opportunity to catch up. And so the police pension fund continues to be underfunded with your assets relative to your actuarially determined liabilities. Having said that, as you can see right here, you are making significant progress against that underfunding situation. So in 2017, you were literally at 2/3 of funded needs in terms of the actuarial requirements. You grew to 69% and now 71%. And so you're making progress there as well. You're making that progress because the City of Columbia continues to make all of the actuarially determined contributions on a timely basis. The 2020 numbers are not yet issued, notwithstanding the lateness of the year. These are as of May 1st, but we checked as recently as today and did not see the 2020 numbers. State of Illinois has been impacted, obviously, as well as everybody else, by coronavirus. And so those numbers weren't available to us. They wouldn't have gone into this audit in any event. I can tell you that the assets that you had in the police fund at May 1st, 2020 were $7,310,000. So the fact that you've gone from 66 to 69 to 71% over the last 3 years is another positive indication of the financial health of the City of Columbia. Mr. Mayor, at this moment, I'm going to pause, and I'm happy to take any questions you might have. I again thank Linda and your staff for working hard under difficult circumstances, and we appreciate the opportunity to come before you with these numbers.
All right, does anybody have any questions, comments? I think we all echo your thank you to Linda and staff. We are blessed to have wonderful staff here that gets things done. So thank you very much for recognizing that. All right, is that it for the evening, Jim?
I think so, other than you may want to just accept the report.
We may.
Yeah, no pressure, no pressure.
Are there any other questions, comments? If none, entertain a motion to accept the report as presented by Alderman Ressler, second by Alderman Hook. Any other questions, comments? Roll call.
Eversole, Agni,
Yes.
Nemitz,
Yes.
Ressler,
Yes.
Fook,
Yes.
Fullcamp,
Yes.
Mertens,
Yes.
and Riddle.
Yes.
Thank you.
All righty. Jim, thank you guys. Linda, thank you.
All right, I will sign off, and good luck. Stay healthy.
All right. Does anybody
you.
have anything else
Same
for the
to
good
you.
of the council before we go into executive session or closed session? Hearing none, I'll entertain a motion to go into closed session under 5 ILCS 122C1, appointment, employment, compensation, discipline, performance, or dismissal of specific employees of the public body. If somebody be so inclined to make that motion by Alderman Nemitz, second by Alderman Hook. Roll call.
Eversole,
Happy New Year.
Agni,
Yes.
Nemitz,
Yes.
Ressler, Fook, Fullcamp, Martin, and Riddle.
Yes.
Thank you.
Call executive session to order. Roll call.
Eversole, Agni, Nemitz, Ressler, Fook, Fullcamp, Martin, and Riddle.